Welcome back to Indianomics. This was actually a powernomics that we were discussing with one equity specialist, Nikhil Nagania of Bernstein, one debt specialist, Girishkumar of ICRA, and a corporate heavyweight, Mohit Bhargava, the former ED of NTPC Renewables and former CEO of NTPC Green. Gentlemen, thank you very much for waiting on. Nikhil, let me start with you. You told me that your research at the moment is confined to NTPC, Power Grid and L&T, on which you have a positive view. What about renewables?
So on the renewable front, so we do have Renew Energy in coverage and Adani Green as well. We are positive on Renew, negative on Adani Green due to valuations. But thematically, again, no denying renewable, is going to accelerate this year, we think. And last year, looking at the kind of bids that happened, which were through the roof, so returns should also improve.
Okay.
So it's not that we are negative on we like the renewable space. There are limited options to invest in the renewable theme in India, at least limited large options as of now.
No, I take your point on that in terms of sheer size of amount of shares outstanding and, depth, experience of companies. Girish, what is your sense about the power equipment companies? Those that supply smart meters and other kinds of power equipment, wires, cables, the KEC International Variety, the power contractors. Is that ecosystem, more healthy now because people are able to pay?
Yeah, so Latha, as I mentioned, the investment requirements across the value chain of the power sector is pretty significant. Generation, transmission, and distribution. Even within generation, there is going to be a focus on incremental thermal capacity addition. And that is certainly required even in the base case scenario, assuming the RE scale up happening. So on top of that, there is a transmission system strengthening requirements. In fact, the CA has already come out with a report a year back, highlighting almost 2.5 lakh crore of transmission strengthening requirements for the country. Given the fact that that is inherently required, from the grid stability and the grid integration requirements, for the higher renewables. On top of that, there are policy schemes like RDSS, which has a thrust on the system strengthening as well as smart metering initiatives. And that itself is another significant investment, almost 1.5 lakh crore of smart meter related, investment ecosystem. So overall investment potential is pretty significant across the value chain, including the renewables. And that would definitely benefit, all the EPC companies, the capital good companies in the power sector. And that is getting reflected in their improving order book, and the very solid order book position for most of these companies, operating in this space.
Is there any piece that you would worry about, Girish? You remember in the last huge upwave from 2004 to 2008, we saw huge investments coming in power, and then when the downside came, we saw maximum debris also in the power sector, financial debris. At the moment, is there any piece you would worry about?
So certainly the margin profile of these OEMs operating in the EPC and the capital goods space would again depending upon the structure of the contracts, whether they are fixed price based, whether to what extent it is covered through price variation clause. Number two, what is the operating scale and what kind of cost competitiveness that these OEMs carry.
No, I agree, but are you worried about any piece?
As such, we don't see any major headwinds in any of the sector as of now, because there have been margin pressures for the EPC companies over the last 2 years, and that has been precisely because of the elevated commodity prices. So there was a significant margin trip which we saw for EPC companies operating in the transmission space, for example, and which is getting normalized because of the commodity traction getting stabilized. So that is very important. So the structure of the contracts, ability to pass on the commodity hikes is very important. And also the level of competitive intensity, because that is also different across the value chain.
Sure.
If you talk about, the solar OEMs, for example, while we have seen a significant scale up in module manufacturing ecosystem, but the competitive intensity is also fairly high. And the level of backward integration will also matter. The cost structure will also matter. So that will determine their the margin expectations.
Fair enough. Mr. Bhargava, do you see any changes in policy? Girish was referring to modules. Now, Nikhil has even written about it, that we give a very high protection to the module companies in India. A 40% tariff is imposed. Do you see these getting tweaked? Because ultimately you have to look at affordability.
I agree with you totally, and I think Nikhil and Girish both have said it rightly. India should try and leverage the falling prices on the module side, and probably I agree that while we have a tariff barrier of 40-45% on from BCD, we also have an ALMM list. So we're actually providing double protection to the solar module manufacturers. So and this probably will maybe lead to slightly higher prices, which is probably not good for the discoms and the entire power sector ecosystem. Having said that, I think if you permit, the one thing which I would like to add to what Girish said in terms of headwinds is, I mean, there has to be focus on execution. The government, through the bidding agencies and companies like NTPC, which also have footprint on the thermal side, as well as a very strong footprint on the renewable side. So we are all, I see all these companies quite committed to make things happen. The challenges are in execution, which are probably linked partly to the EPC people. I would assume the margins have become better over a period of time. We had very, thin margins when all this COVID period and all that, when the prices were quite elevated. But after that, there has been a relative easing in terms of availability. And if the domestic solar manufacturers, for example, if they can get their act together and can supply at very decent prices to the solar developers, and the margin pressures are eased, then these companies are expected to do quite well. And once the EPC delivery happens, the projects are delivered on time. And of course, I'm assuming here that most of these will be able to maintain well over the long period of time. So from that perspective, they should do well over a long-term perspective.
Okay. Yes, I mean, the government has gone whole hog over smart meters, which of course allows the generating company to know, or the discom to know, who is consuming where. But it would have been so much better if it was prepaid meters, so that there is some financial guarantee and the ability to, perhaps supply power in small pouches to distant areas. That seems to be an experiment that has not taken off. But Nikhil, would you say that solar rooftops is something which we should watch out for? What should we watch out for in terms of sectors or products?
So solar rooftop is something which has always performed much poorer than what we have expected, right? Solar rooftop penetration in India is still very low. Countries like China have done a phenomenal job in adding rooftop solar the last few years. But this year and coming couple of years, we do expect a stronger government push towards rooftop solar.
Okay.
I think from a policy standpoint, the government looks to solve for availability and affordability of power. In terms of affordability of power, rooftop solar could be a good tool to leverage to reduce power tariffs. Okay. So we do expect a stronger push then in the coming years. Yeah.
Okay. Final word, Girish, anything you're expecting on the policy front from the new government?
So, Latha, we expect the policy focus to continue to remain strong from the new government in the renewables. The targets already laid out at 500 gigawatt cumulatively by 2030. Various strong and encouraging policies towards attracting investments across the value chain of renewables, including the equipment manufacturing ecosystem. I think that policy focus is expected to continue, because that is something which is really required for a sector to grow. More importantly, just to supplement what Mohit has said, even in the module manufacturing side, what is really required is integrated, cost competitive, vertically integrated and cost competitive manufacturing ecosystem is required. In that front, the PLI scheme has taken a shape in 2 rounds, and timely implementation of these integrated capacities is certainly required for India to remain cost competitive and also to reduce the import dependency, in the key bought-outs in the value chain. And that will also help the sector to grow sustainably in terms of attracting the and ensuring these capacities. Okay. So that's all I would like to say at this point.
Coal imports, your report says, rose by 18% in the year because the government wanted more stocks with power generators. Coal was shunned by ESG investors. Nikhil, it seems to have got a new lease of life. Do you think the lease of life for thermal lasts a little longer?
Absolutely. I mean, you can look at the power prices today on the exchange. Afternoon is 2 rupees, evening is 10 rupees in the non-solar hours. That's largely because we don't have enough dispatchable power which a thermal plant can supply in the non-solar time. So we think, I mean, coal had almost been written off, but we think probably we need more thermal generation than what we are even.
Okay. Growth is more important than climate. That's the bottom line at this point in time. Thank you very much, Mohit Bhargava, Girish Kadam, and Nikhil Nagania for enlightening us about the power sector. And the key takeaway being that there is money to be made practically on all sectors, from renewables, of course, which is a very small space, but definitely thermal generators, even ugly old coal, all of them still money-making opportunities, and of course, growth generating opportunities for the economy. Wrap up on this special edition of Indianomics. Thanks much for watching.